let's talk about what we're all here for, right? So that is first steps into the multifamily acquisition process. Like I just said, we'll be discussing basically the order of operations from how do you get started to, getting deals in your inbox all the way to, making those, putting those under contract. So that includes outreach to brokers, underwriting, whether that's Excel or Google Sheets or whatever you like to use, getting boots on the ground, touring those properties. When you involve third-party people, including insurance, most important, debt, because not everyone has boatloads of cash just sitting in their bank account. Your management, whether it's going to be yourself or third party, what the bidding process looks like, what an accepted LOI is, what it looks like, and then any questions you guys may have. So to start things off, I can talk about myself a little bit. So I've been with the company for 2.5 years. I started out pretty green to the industry and quickly was thrown into the mix of things. And I've underwritten well over 1,000 multifamily deals. I've dabbled with hotels, obviously, as we are starting to explore that asset class. Car washes, storage, I'm a little less well-versed, but I know people that know it. So if you have questions, I can revert you to them. So basically what my job entails and what we're talking about is how do you source multifamily deals? Basically, that is outreach, having a personality and talking to brokers, and whether you want to organize it or make a list or what are kind of the important things to talk about. So the way we do it internally is we have a CRM that I've built out, me and a couple others, not just me, can't take all the credit, where I communicate to roughly 60 different teams. So for instance, here in Austin, you have 5 dominant brokerage firms that this is for reference for any market. You have your JLL, your Cushman Wakefield, your Newmark, your Berkadia, CBRE. There's a plethora of brokerage firms for these that represent sellers in these large multifamily deals. We're talking, all sorts, shapes, sizes, land, but obviously we're talking multifamily deals that we look at as anywhere from 100 plus units. So what I do is, I introduce myself, whether that's a phone call, an email, a text, whatever they like to do, I do it with that specific person. And that's something I'll actually document. So I know the best way to communicate. And in this CRM, I actually get a notification that every 2 weeks I need to follow up with that person so I can stay on top of it. Because when I first introduced myself, I like to tell them that straight up, I'm honest. I like to make things simple for everyone. In this realm of multifamily or just real estate, there's a lot of let's call it exaggerations, and I try not to do that. So just getting that right off the chest, tell them who you are, be honest, and they'll appreciate that, whether it's something they like or they don't. At least they know. So over time, you just communicate with them, you meet them in person, whether that's for coffee, drinks, play around the golf. And they'll be at the top of your mind once deals hit their inbox, right? Their job is to go to sellers and then bring deals to buyers like PassiveNice.com. And if you're at top of mind, constantly in communication with them, they're going to send you more and more and more deals. Obviously, with experience, with the firm backing you, knowing that we can execute on deals, they're going to send more deals to us. But that comes with time and consistency and just being top of mind, like I said. So sourcing deals, it's as simple as just having good communication and outreach and just being on top of it. Something I like to do is just have it systematized. I'm very type A. I like it all organized, having my notes, even as it's simple as I left a voicemail, they never got back to me. So that's the first step. Well, there's a lot of first steps, but that's the first step once you have a platform, once you have an idea of what you want. So that's the outreach to brokerage right there. It's not super black and white, like I just kind of made it to be. Everyone's different. Everyone has their own processes. So that's the beauty of this. You can make it how you want it to be. You don't have to talk to anyone, but for that matter, you probably won't get any deals to underwrite. Which leads me to the next point, which is underwriting. So we use Excel to underwrite our deals. Underwriting is just valuing the properties, creating pro formas, etc. I was introduced to underwriting in Excel, so that's what I like to use. But I've seen other people use other softwares, and when you get starting out, you don't need a super complex model. It could be something you find online. It could be something you build yourself using YouTube to teach yourself, or a course. But the more consistent the model is, the quicker you get at underwriting deals, and in turn that gives you the speed and accuracy you need in order to be competitive on these deals. So we use the same model. Obviously, it changes per deal. There's 1,000 different cells that I don't know the number, but we probably are changing not even close to half of that. So it's super automatic, and that's also because we're looking at very similar deals. We're looking at deals that typically don't have retail, that are Class A. They're very consistent. They're conventional multifamily deals. With that being said, we're able to use the same model. So if you're looking at a hotel, of course, you're going to have a separate model. If you're looking at a car wash, of course, you're going to have a separate model. So we have those models. We built them out over time, but just make sure it makes sense. With numbers, there's always a right answer. So that's something you'll learn over time and get comfortable with, but it is a big part of this, acquisition process. So next is touring properties. That's basically just getting boots on the ground, getting face-to-face time with brokers, because they're going to be the ones that are touring you. Even if the deals don't make sense, it makes sense to get in front of them, to tell them, to show them that you're actively underwriting, you're an active buyer. And it's really cool because you get to see the property, right? You get to see the tenant base, which is huge. You get to see the types of cars people are driving. You get to see the local area as you drive in, you drive around, you can see the comps. You can see what the apartments are actually like, what, if you're doing a value add or construction, CapEx, you can see what is needed. It's always smart to bring a notepad and just jot things down. You should have a standard set of questions when you go and tour properties to ask the broker. Typically, someone at the property that's worked there for 6+ months or whatever it may be is also touring you, so they know the ins and outs. Sometimes you'll get someone that's super honest that'll tell you, hey, this elevator's been broken for a year. It would be great when you come and buy this place to fix it. And they know you're looking to buy it, so you can basically ask anything you want. I'd recommend tour lasts anywhere from 20 to 40 minutes. I try to make it as long as possible to get as much time with the broker, to ask as many questions as possible. Basically, just get as much face time as possible. And it's fun. It's better than being behind a computer, right? So touring properties, if you guys have any questions, again, feel free to put it in the chat box. This is typically the order of operations. So you source the deal, you talk to the brokers about the timing of it, the guidance, you underwrite that, the assumptions, you go out, you like the deal, you go out and tour the deal. You go back into the models and you correct the things that, you can underwrite to with more accuracy, whether that's, these units are 1,500 square feet, which I didn't realize. So the paint job that's needed is actually going to be $1,000 instead of my $500 assumption. Those simple little things go a long way. And as time progresses, the more comfortable you'll get with understanding what is super important to recognize, because it's the little things. The crack in the ceiling in the clubhouse is a lot more important than what how strong the water is. I don't know, something simple. So that's touring properties. You like the deal, the tour went very well, the broker thinks you have a good chance to get the deal. Your underwriting looks good. So when do you start involving the next three? So management, your insurance, and debt. So these are very, very important things you need to know before you enter into a contract. So if you're at a property, commercial properties, 5 units or more, typically, I don't know if you own or manage your own deals, write that in your chat box if you guys enjoy third parties or managing yourself. I'm very curious, but here at Passive, we actually use a third party. We are consistent with who we use. FCA Management out of Charlotte. They manage all of our deals. It basically feels like, they're part of our family. I see Paul said third party. Totally agree. They deal with everything. They are incredible. Your third party managers are the ones that are actually using your budget, your pro forma, and putting it into effect, translating that into real life. So it's super important to find the right management firm, and to involve them before putting a deal under contract. So typically, depending on where the deal is, if a deal's in Charlotte, we'll go to them immediately and say, hey, what do you think of this area? What do you think of the crime? Is it high? Whatever. We'll get their opinions on the deal. If the deal starts to make sense, we tour the property, we will get an external pro forma from them. We'll say, hey, where do you think you can bring this deal from where it is currently now? Can you increase the rents if we do this amount of CapEx? And, sometimes they'll even give you a CapEx budget. So that's super important to involve them pretty early on. You should be having a relationship prior to going out and buying deals. Excuse me. So that's, I think it's a big debate of when you start to involve them. Oh, my AirPods are dying. If they die, please let me know. So that's important. Okay, let's move on. Insurance. Insurance is probably your second biggest expense, with number one being property taxes. So it depends. So here in Austin versus Houston, there is a huge difference. You need to know your markets. You need to know what and why there's a big difference and who you're going to use. Again, we're consistent with who we use. It's someone that we're comfortable with. We know their process. They know ours. And they know their numbers. That's most important. If they're going to give you a soft quote while you're underwriting the deal, which I highly recommend you involve them before you put a deal under contract, you need to get a quote from them and know that they know they're correct, if that makes sense. So for example, insurance right now in Houston has changed significantly in the past 12, 24 months. The reason being is because one of the largest insurance carriers just dropped out of out of Texas. And a lot of their stuff was actually in Houston. So now all those insurances need to disperse throughout the next largest, et cetera. And that has really put premiums on these insurance rates. So this is just an example, but deals that were once $600 per door, per unit, whatever you want to say, are now well over $1,000 per unit. And that's not the case in Austin and San Antonio. So it's important to know that, because that could be, if you're on 100, 200, 300 unit property, that could be 6 digits difference in underwriting, which is significant. Which leads me to debt. Debt, most firms use debt, significant amount of debt, 60% leverage, up to 80% leverage sometimes, it could be 40%. But that is the most important thing, the most important piece to the puzzle here. You need to create, just as you created relationships with brokers that represent sellers in apartment sales, you need to create relationships with debt brokers that are going to, there's two ways to do it. You could find debt yourself with a local bank, with whomever, or you can use a broker, a broker, a capital markets broker to represent you. And they already have all the connections in the world when it comes to lending. And they're the middleman and help piece your new property with the best debt terms possible. So it's very important to have those relationships up front. So when you do get a deal, you can get a soft quote before you submit a bid, especially in an environment that we're in today. We're at a point where we're nearly getting term sheets from the lender before we even get an accepted LOI, which is unheard of. We're not there yet. So I don't know if something we'll do, but we're so far into the vetting of the debt that we could not be more comfortable. So it's really, that's probably number 2 most important thing on this list here. Probably number 1 is your debt, understanding the debt markets, following. You can go to Pensford.com is something that I look at every single day when I wake up. It shows the treasuries, it shows the forward curve, just shows you where the trends are in the market, and understanding what a spread is, all of this, which I'm not going to get into, but knowing your debt is crucial. And involving them early is also crucial. If you know you're going to be making a bid on a deal, you need to be weeks before making that offer, you need to have your debt figured out to where you feel comfortable. And you really don't, you won't know Pensford. Here, I'll open it. This is the website. If it loads, here you go. So this just is like a quick snapshot of everything that's going on. I think they even give news. So you get your treasuries, your swaps, your floating. So SOFR, Fed, overnight SOFR, and this changes daily. So you can see the 10 years up. This is crazy because this was 2.8 2 weeks ago. They're fluctuating so much that you really need to keep an eye on it, especially when underwriting a deal isn't, a day event. It takes weeks, especially the larger they are, the longer the process is. So I highly recommend checking out that website. It's just Pensford. I'll put it in the chat box. There you go. So, okay, moving on. Now you got your debt, you got your insurance, your management's involved. They know what's going on toward the property. Your underwriting's looking clean and good. The call for offers with the CFO is today. What do? You need to have an LOI, a letter of intent. What does that look like? Well, it's usually a 1 or 2 page document that can be pretty standard. You're going to include your purchase price. You're going to include the deal itself, right? The address, the name of it, who you are, your firm's name. You're going to have some legal jargon. I would consult a legal person for this to create a standard one. I'm sure you can find one online, but you definitely want to make it your own. And you're going to have your earnest money deposits. That's typically anywhere from 1% to 3% of the purchase price. A lot of times in today's environment, you need to have hard money, meaning, if you put this thing under contract and in 60 days time, you realize you cannot perform, you cannot raise, you don't have the equity, you can't find the correct debt, and you drop the deal, that money is going to be gone. That's pretty standard in today's environment to have that hard money. On top of that, you're going to have your due diligence time frame, your inspection time frame, and whether you're going to have an extension or not. Typically, that looks like 30 days and 30 days, so 60 days. And you submit that letter of intent to the broker typically, and they send it over to the seller. And there is this thing called multiple rounds of offers, which is a pain, but a lot of times in multifamily, let's call it institutional multifamily, you're battling against multiple firms. Usually it's, anywhere from 10 to 100 different firms looking at the deal. So it's important to know to not put your best foot forward. Well, you can put your best foot forward and say, hey, this is what we have, but know that the seller is going to squeeze and wring out all the people that don't belong there, that not can't perform, but basically that can't be competitive based on the other groups. So there's multiple rounds. There's, initial call for offers. It's called initial because there's a second round, and then there's a best and final. So knowing that, it's basically like a chess game. How much of your cards, well, now I'm going to cards or poker, but how many of the cards do you want to put on the table immediately? At what point? So figuring out that balance is pretty crucial to getting an accepted LOI, because you can send out 50 LOIs and never get an accepted LOI, which is pretty typical when you're starting out. So knowing that going in only benefits you in the long run. And once you get that, I have another webinar. I don't know, I think it's in December. That's actually going to go into, once you get an accepted LOI, what are the next steps, what it looks like, similar to this, keeping it basic, but just running through the steps. So I'm going to conclude there. I'm getting dry throat, dry mouth. So feel free to put in your questions in the chat box or the Q&A. I don't see any questions now, so that means I'm either really boring or I did my job. And Paul put one in the chat box here. Which rate should you look at to figure out what the rate of a multifamily loan would be? Yeah, that's a good question. So it depends. If you're going off agency, you typically look at treasuries. If you want a 5-year term, 7-year term, or 10-year term, depending on your hold period, on your assumptions, that's important. So obviously, the longer the term, it's not obvious. The longer the term, the lower the percentage is going to be. So right now we're underwriting off of a 10-year term, meaning we're hoping to get a 10-year fixed rate loan. That just depends, call it 18 months ago, we were looking at private debt funds, which was going off of term SOFR. So it's constantly changing. This is why you need to have good relationships with your debt brokers, because they know they can answer these questions for you better than, call it an acquisitions guy. So I hope that answers your question. Inverted yield curve. Yep, good observation. Let's see. How do we find major commercial brokers in our area? It's as simple as a Google search, right? So that is a good question. I recommend, if you're really looking to get into the field of institutional quality stuff, checking out some what's it called? Conferences, because a lot of the big fish do end up going, especially NMHC. It is a hefty price tag to go, but you have everyone in the world that you'd need to be there. And then a Google search. So for instance, if you type in Austin, Cushman, Wakefield, right? They'll pop right up. I don't know why images of guys showed up. Sorry for that, but if you go to people, there'll be tons of people, out of different offices, and each brokerage firm has this find an office. I don't mean to plug Cushman in any way, shape, or form, but all of them have this, right? Let's see. The line works. Good. If you guys don't mind moving any questions you may have to the Q&A, it's a little bit easier for me to kind of press, if I answered it or not, because I'm a little bit losing track. I'll answer a few more here as time's getting close to half the hour. So if you're in Austin and want to meet up in person, not a problem at all. I'm pretty accessible. I love meeting new people, whether you're an investor looking to get in. Love chatting with anyone. So feel free to do that, because I saw there was a couple people from Austin. Let's see. My email was just put in the chat box. It's chris@passiveinvesting.com. It looks like you're starting a commercial agency. That's awesome. Congratulations. Good luck with that. It's really exciting stuff. I wish you the best. I think, I'm not seeing too many questions coming to the Q&A, so I'm going to end it there. I appreciate everyone's time. Again, with the short amount of time, there is that, what is it called? Code to put into the Multifamily Investor Nation to get the $100 off. So I encourage you to check that out. And again, chris@passiveinvesting.com. That's my email. Feel free to reach out with any questions, concerns, threats, whatever. And yeah, I'll be seeing you guys in December. So be good, and talk to you guys later.